Good afternoon, guys. So this is, I guess, the fifth or the sixth session of our demand and supply. Slowly and steadily, we are moving forward. So there are few questions that I would like to ask and address to you all, guys. I had discussed about candlesticks, how they are formed, and then I had discussed few theories why the uptrend and downtrends are formed. And then in one more session, I had discussed with some few numbers that what is the reason the prices go higher high and lower low in trends. So all these are clear to all you guys, na? And firstly, this is my one question, and the second question is that are you guys trading or investing in the market after the sessions or not? Like, what are you doing after having the sessions? Are you implementing it somewhere or like nothing? Just listening through the sessions and that's it. Because I'm asking this because the more we go in deeper into say intermediate level, things will become more conceptual. So for that, it is pretty much required that the prior understanding should be clear. That is why. Okay, as of now, learning only. So fine. The candlesticks that I had discussed, that much understanding everyone is having, right? Even if you are not trading, is my screen visible? Let me share it. Just a second. Okay.
Yes, it is visible.
So all the types of candlesticks that we had discussed in the beginning of our sessions, how they are formed, why they are formed, what is the reason behind the formation of these candlesticks, how the buyers and sellers are pushing the price up and down. These basics are clear or not? This I want to know. Then I will move forward with new concepts and new topics. This is one question. Another question is, even if you are not trading, are you guys following the charts? Are you guys able to open any chart of any stock or any index and just go through the candles, how they are forming? Like, do you guys have even basic understanding about these charts? I'm not talking about any patterns or anything. Say if I open this chart in front of you, so can you guys tell me what is the time frame of this chart? Can you guys tell me what is the current price of this stock? What is the like, can you interpret about this chart, basic layman? Yes or no?
Yes,
Yes,
Akash.
So can you tell me what is the time frame of this chart, in which time
It's a
frame
day
I am?
wise.
Yeah,
this
correct.
is the day wide. Each candle represents one day,
Good, fine.
and
Okay.
at present the rate is 230, I think.
Yeah, 229.20.
Yeah, yeah.
Okay. So in Zerodha, or even if you, so I would recommend you to trade in Zerodha because it has got very simple features. But if
Okay.
you are accustomed with any other broker, that is also fine. Personally, I am at ease trading at Zerodha. And for the back testing and all the practice, you can use Trading View. This
Okay.
yeah, Trading View is good. You do not need to subscribe for and pay anything. Just the basic version is enough, free version. And once you guys reach to a much higher level where more backtesting is required, so generally what happens, if 10 people are learning stock market from the basics, only one or two reach till that level, intermediate. Rest 8 to 9 people, they just give up interest, or they lose their patience, or they say that this is not my cup of tea, and they leave. So if people like you, one or two, can reach till that level along with us, then I will share my ID, this ID and password. So this is premium version that I have taken, where you will find more features which will be much more helpful, like this replay feature. If these replay features, where you can practice like a real time market, These are available in premium features. So when you guys reach to that level, I will definitely share with you guys. So moving on to today's topic, I am going to discuss multi time frame today. Like what is multi time frame and why it is important to us. So as of now, we were looking into charts in one single time frame, one daily time frame, one weekly time frame, monthly time frame, like this. Why multi time frame analysis is very important is that without looking at the bigger picture, you cannot understand what is going to happen in a longer time period or a shorter time period. Okay. So timings are very, very important. Very, very important. What do I mean by timings? When you look into the calendar, this calendar plays a very significant role in trading also, in investing also. So if I say how many trading days were in July, you have to subtract the Saturdays and the Sundays, and if there are any government holidays, and rest are the trading days. So if you see a green candle which is on a monthly time frame, that doesn't mean that this green candle has 30 days or 31 days. When you break this green candle, you will get how many daily candles? Saturday, Sunday subtracted, and if there is any government holiday, uh, yeah, sorry. So if there is any government holiday, that is subtracted, and the remaining days are included in this monthly candle. Fine. So how we are going to imagine things is that, say, let me start with an example. So this is my monthly candle. I will denote it with an M. The abbreviation is M. Monthly candle. When I try to understand that what happened in this month, we can say that this was my highest price, this was my lowest price, opening price, and closing price. The month has ended, right? And it is a green candle, price went up. If I try to break this into weekly candle, how many weekly candles are we going to get? We need to see the calendar. Say for July month, how many week are we going to get? This Saturday is not included because it is a holiday. So 1, 2, 3, 4, and a fifth week also. Why I'm talking about fifth week also? You see, 31st July comes in the next week. So even if there is only one day in that week, still that weekly candle will be present there. For example, our market timing is from 9:15 a.m. to 3:30 p.m. right? How many hourly candles are we going to get? So from 9:15 to 3:15, how many whole hourly candles are we going to get? 3, 3, 6 hourly candles. Still 15 minutes is remaining. That will also show an hourly candle. Even if it is a 15-minute candle, it will still be included in that hourly candle. Like if I go to 1 hour, this is my hourly time frame, right? 1 hour I have selected. Now if you see, this is 9:15. Look at the x-axis, 28th July 9:15. So one candle, 2, 3, 4, 5, 6, and this seventh one. This seventh one, what is the timing? 3:15 is the timing of the opening of the candle. So from 3:15 to 3:45, 3:15 to 4:15, it had to be supposedly. But since market closes at 3:30, even if it is a 15-minute candle, it will show in 1 hour candle. So how can we get whole numbers? Whole numbers, how can we divide the time by whole numbers? If you go to 75 minute or 125 minute. So if you see 125 minute, 125 minute, how many minutes are there? 1, 2, 3, 4, 400, 500 minutes, and 125 more. So 625 minutes. If you convert it into hours, then you will automatically get from 9:15 to 3:30. That means when you sorry, not 5, only 3, only 3. That means if you try to equally divide 9:15 to 3:30, you can divide it by dividing by 125. equal candles of equal time frame. If you take 75 minutes, then also you will get equal intervals. So time frame becomes very much important. How many weeks are there? How many months are there when you look at the chart? So suppose I go to a weekly chart. This is my weekly chart. Why I am saying it is important? What is the stock's name? Name is Petronet LNG. So this is the week that has gone by, the previous week. And what was the first week of this month? This one, Monday 3 July 21, because 1st July was Saturday, 2nd July was Sunday. Let me see. See, 1st July was Saturday, 2nd July was Sunday. So the week started from here. This is the first week, second week, third week, fourth week. Now, someone is trading without looking at the calendar, or even investing without looking in the calendar. So what he knows, that the next week which is going to come, that will be of only one day. So even if there is a candle formed like this does not constitute of 4 days. This is of only one day, and it becomes very, very significant. Later on you will understand why this becomes very, very significant, why we need to check every time. So multi time frame, suppose I assume that there are 4 weeks in this monthly candle. How can we break it? Let me enter the price. So this was my opening price. I will write 100. My lowest price was 90. Highest was say 120. And closing was at 115. Okay. Now suppose I want to break it into weekly. So if I try to break this monthly into a weekly chart, I get 4 candles, something like this, assuming that there are 4 candles. So what we can say here, if we now look at all these candles and try to mark the highest and the lowest point, this has to be my highest point. Why it is not typing? 120. This has to be my lowest point, 90. My opening price was 100. So this week, this was my first candle, my week's first candle. So supposedly this has to be my opening candle. It opened from 100 and it closed near 115. This one. So now you can see this monthly candles picture. If I break into weekly, something like this I can see. And what I can say, there was a dip in the price in the first week. Next 2 weeks it halted, it paused, and the last week price went up. Again, if I try to break all these into days, or break this into days, for this I will get say 20 days, 20 candles for this monthly. And also if I break all this week, then also I get say 20 or 22 candles, excluding Saturday, Sunday and government holidays for trading days. Again, for that daily candle, if I break into hours, how many hours will I get? So I will give you 5 minutes. 5 minutes is also very much. Tell me, if I break a monthly candle into 3-hour candles, how many 3-hour candles will I get in a month? And assume that there are 20 trading days. I am giving you the condition. There are 20 trading days for 1 month. How many 3-hour candles can I get? I'll give you 2 minutes, not 5. 5 is too much. Tell me. Calculate and tell me. You can type in into the chat, or even you can open your mic and tell me.
60.
Okay, anyone else?
60.
Anyone else wants to give a try? 60 is wrong. Anyone else? Sixty is not correct. Anyone else? I got only 2 replies. 40. So I would repeat my question. Okay, please take your time, calculate. In 1 month, I am assuming there are 20 trading days. If I break this 1 month into 3-hour candles, how many 3-hour candles will I get?
Yeah, 40.
Okay, 40. We will wait for Ravindra ji also. He is calculating. Let us give him 1 more minute. So let's not hurry or rush. These are very fundamental things we need to understand. 40. Okay, so can we discuss?
Sure.
Ravindra ji,
Uh,
your answer please.
It's around 42.
Okay, so the answer is 60 only. 60 is the correct answer. So the first learning from this is that until and unless you are confident with your own analysis, you cannot make money from the market. There will be 10 people telling you 10 views. This is not right, that is not right. But whatever is your view, you have to stick to it. So for 1 day, we will have 3 candles. First candle from 9:15 to 12:15. First 3-hour candle. Then from 12:15 to 3:15, the second 3-hour candle. And then there will be 15 minutes still left, but it will be still counted in the 3-hour candle. The candle will still show. So 3 candle for 1 day. So 20 into 6, 30, 20 into 3, 60. 60 is only the right answer. Right? So from the next time, you should be confident on yourself that this is my calculation. And as per my calculation, this is my answer. I will stick to it. Even if someone else tells whatever he wants to say. So this is how we calculate this thing. Now, moving on further, why these calendars are very important is, firstly, there are many people who do mutual funds, SIP. So for mutual fund SIP, in the first week of the month beginning only, their money, their amounts are deducted and invested in the market. So for the upcoming month, August, Tuesday. So from first, second, third, fourth, these first week 4 days, there will be huge investments in mutual funds. Those have automatic SIPs. So what will happen? Mutual funds never short with your money. They always buy only because they are investing. So for the first week, we can see a good upside price movement due to more demand from the mutual funds. They will take your money and invest in the market first week. So this is one point. Another point is that I will now go back to the trend that I was discussing. We were discussing about trends. Again, I will go back this trend, uptrend. So say there is a scenario in monthly candle. There is a scenario in monthly candle. I'll show you. Each candle represents 1 month here. Okay, this is first month. It can be any month. Second month, third month, and then a fourth month here. So when we see a trend, how do we see it? We see it went up, came down, did not break this point, again It is forming the price of an uptrend. And now how can we visualize what can happen the next month? We can visualize that, okay, the next month, there is a very good probability it can go into an uptrend. So how do we speculate? We speculate that, okay, for the next month, I can see if the price does not go below this, I can see an uptrend starting to form like this. So these are all monthly candles. When I try to break this latest candle into weekly, I will get 4 candles or say 5 candles. How many weeks are there? So based on that, suppose the price here is 100 and price here is 60. Monthly, this is monthly. Now, what you have visualized in your mind is that this stock is looking good to go in an uptrend. It should not break this point, because we know in an uptrend, price keeps on going upside. It does not break the lower low. So what we do, we buy at 100, we buy here and keep our stop loss here. Stop loss means our risk. So suppose in the next month a red candle is formed like this, our structure is broken. Our structure is broken. What do we mean by structure? We know uptrend structure is like this. The moment it breaks like this, there is no more uptrend structure. We should simply exit. Whatever might be the news, even if Elon Musk says that this is a very good stock, buy, no, I am not going to buy. If you are trading on technicals, mind it, if you are trading on technicals, there is no room for fundamentals. You have to choose either as of now. Later on, I will also teach you how to include fundamentals also. But as of now, only technical, what we are discussing. So we bought at 100 and we keep our stop loss at 60. Suppose if I break this monthly candle and see what is happening in weekly, and I see the same picture here. I see in weekly that this candle is forming something like this. This is three candles and one more candle I am going to have here. This is my one more candle here. Just a second, let me make it. This is one green, let me have one green candle. Like this. So how can we say that this 4 candles is equivalent to this candle? If you try to see the highest point, this is the highest point of my price. This is the lowest point of my price. This was my opening price. This is the first week, right? This is the first week. So our opening was somewhere here. This point here. So this was my opening, my lowest price, and this is my highest price. So let me scale it a bit more so that it makes sense, a bit more realistic. Let me just scale it. Just think this candle is this much. Now if you see, this is my opening, this is my lowest point. I am considering all the 4 candles, and we're trying to make this candle. From these 4, I'm trying to make this single candle monthly, this monthly. This is my highest point and this is my closing. Now using all these 4 lines, if I try to make my candle, how it will look? It will look something like this. Highest point, closing, opening, and lowest point. So I was unable to scale exact the same copy, but the logic is this only, right? So looking at this picture, this is my 100 rupees and this is my 60 rupees. This is 60 and this is 100. Okay. So in weekly, suppose now we are entering at 100. I know that this is a very nice big green candle, very powerful green candle. This is 100, this is 60, and this is say 80. So I know this green candle is very good looking. I can place my stop loss at 80 also instead of 60, which is logical. Why it is logical? Because this is a very nice big green candle. So if there is a very big red candle which is eating away this green candle, which means that the demand is totally eliminated. The structure is totally broken. After such a huge demand, immediately price should not go below this point. So what was my benefit of multi-time frame analysis? In monthly, I was keeping my loss at 60. But when I broke this candle into 4 candles, I can see even if I keep my stop loss at 80, it is still logical. It might happen if I try to break all this candle into daily candle, I might find a more smaller stop loss. I will take you to an example. No worries, I will take you to an example also. I will show you. Suppose this chart only Petronet, which is open here. I was analyzing this, so I'll go with this only. So if you guys want to discuss any stock, you can just type in and tell me. I can open that stock and discuss also. If I see now what is happening, this is monthly time frame. If I try to draw a price action from this point, what I can see, it went up, came down. Now what it is trying? It is trying to go up. So if it has to go up, my first question, if it has to go up, it will straight away complete this trend structure and then it will go up. And if it has to go down, it will simply make a structure like this and then go down. So we know very well in this monthly candle, only 1 day is left. Today is 30 and tomorrow only 1 day is left. So say tomorrow it closes here itself, 1-2 rupees up or down. So what will be our condition for an uptrend for the next month? A green candle, something like this, so that this structure gets completed. For an uptrend, we can visualize a green candle like this on monthly basis. And for a down, for price to go down, something like this it has to form. So I can say, okay, it is forming a downtrend structure like this. So if I enter here at 229, I know very well this should not be broken because this is our lower low, not this green. As of now, this is my swing. I want to say swing, SWING, swing. So this is my swing. This should not get broken. It should go up and it should continue like this. In an uptrend, this is what happens. You see here, if I go a little bit backwards also, here also you can see. You see how the uptrend goes? It goes up, it halts, goes up, it halts. So these swings are never broken in an uptrend. So coming back to our point, say we buy at 229 on a monthly basis and our risk is at 216. I'll just write here. Buy at 229. So let me round it off so that it would be easier for us to discuss. Buy at 230 and we keep our SL at 216, which means if price goes below this, our structure is broken and we should exit. This is based on monthly. And what we expect? We expect that if it goes into an uptrend, it will form a nice green candle. It has to form if it has to go to an uptrend. So we can expect a green candle, say till this much, 250. For the time being, let me assume for till 250. So I set my target at 250. Why 250? Why not some other price? This is just an arbitrary target I took. It might change later also. 250. Now, let me break this monthly candle, this candle in which I am supposed to buy into weekly. Let me break it in weekly. So this is what in weekly it is looking. The lines are the same, the levels are the same, everything is same. Now what do we see in weekly? In weekly also we see an uptrend structure starting to form. How? See, it went up, came down, now it is forming a green candle, and from here itself it should make an uptrend candle and it should go up. If it has to go up, There is always an if. If it has to go up, it will form a green candle and it will go here. So we know very well from weekly that forget about this, even this should not be broken in weekly. In weekly, if it has to be strong, here itself it will form a candle green and then it will move up. And when in weekly it will go like this, in monthly automatically it will form that structure. Try to visualize that in your mind. So now I know very well that instead of keeping 216 as a stop loss, even if I keep my stop loss here at 222, weekly basis SL 222, then also I am logically correct. I am logically not wrong. From here, because it is showing the symptoms. It is showing the symptoms that yes, I am trying to make an uptrend. I am trying to go up. So in weekly, it went up, came down, again a green candle, and from here itself it should move up if it has to go up. Now let's see if we can reduce that in daily also. Let me go to daily candle. Now this is daily candle. This whole month's candle is all this thing happened in daily. So this is all our July month. You see here July. That one single candle, what you saw in monthly, we broke it into weekly, and now we see this much of an daily candle in July month. So this Friday, which went 2 days back, what you see, a very, very good green candle. You see here. What is this characteristic of this green candle? You see, this green candle ate away all these red candles. Ate away. This 1, 2, 3, 4, 5, 6, 7, 8. So 8 days candles eaten away by one green candle. What does it say? It says that there is a good demand. There is a very good demand. That's why at one day only it ate away all these 8 candles. So again, logically, if price has to go up from here, it should not even break this green candle also. It should not even break this point also. 223. So since our weekly stop loss was here at 222 and daily is 223, not much of a difference. So when there is very small differences, we generally go safe. Suppose say this point was 228, suppose, and this is 222, 6 rupees difference. Then we might have given a thought that okay, there is 6 rupees difference. Let's again shift our stop loss more upwards. But now we do not see much of a difference, so this is fine only. So now, how do we visualize everything? Let's go to monthly. This is our monthly candle. There is one red candle, 2 red candles and a green candle. Okay. So is there any way I can copy this? I want to copy this whole thing. Cannot find. Okay, fine. I'll just draw it. I'll try to draw it. So this is our monthly red candle, and this is green candle which is forming as of now. Fine. We go to weekly. Fine. So this is what we were seeing in monthly. Ebb. In weekly, what we are seeing? There is a green candle, a small red candle, a red candle, and then an immediate green candle, which is what we are seeing in weekly. And when we go to daily, this is what we are seeing in daily. Now try to visualize. This was our monthly candle. This is our July candle. These are all monthly candles. One month. This is our candle of concern. This is July green candle. Remember what we saw in monthly. When we broke this, we got these 4 weekly candles. This was the green candle. So what we want? Next month we want something like this. And when will this happen? When in weekly also it will go like this, uptrend. And when this weekly will happen, when will it happen? When in daily also it will go like that. So now you see these are all daily candles. So what we can expect in upcoming days, say price makes something like this. So in daily, it is trying to make an uptrend, due to which in weekly also it is showing an uptrend, and due to which in monthly also it is showing an uptrend. So this is how we need to picturize and visualize in our mind that what pattern can we expect in daily, in weekly, in monthly. So in daily, suppose we get one more big green candle. It can happen, we can get one more big green candle like this. The moment it makes like this, in weekly you will see, in weekly automatically you will get this candle only. And when you go to monthly, in monthly also you will see a candle like this only. So why I am telling this repeatedly? Okay, now forget about the target. We do not need to discuss about target. Suppose we look into this red candle, this big red candle. This is of which month? This candle is of May month. And I want to break this red candle into weekly candle. I want to see all the weeks of May month. So this is all my week. This is my first week of May, second week, third week, fourth week, and I think there was one fifth small week also, because this is June. So these candles are my May month candle. So you see there is a big red candle, there is a green candle also. So until and unless we break a bigger time frame into a smaller one, we cannot time our trades properly, and we cannot speculate properly that okay, what we can expect now. So if I go to an yearly candle, this is yearly candle, each candle is 1 year. For Petronet, each candle is 1 year candle. So what we are seeing, Petronet from 2016 it went up straight away. Again it is forming an uptrend only. If you try to visualize an uptrend for a long period of time from 2004, you see, if you go like this, you can simply see like this. So if it has to go up, this green, now the question is, if it has to go up from the current candle itself. This second part is very important. From the current candle itself, it should not, this candle should not turn into red. It should simply go like this. Then this structure will be complete. So to complete this uptrend structure, and see for this candle how much time is remaining, you can see here 5 months. It is written 5M. That means to complete this yearly candle, 5 months is still left. We are already in the 7th month. July is ending. So if someone says that I will hold Petronet for 10 years and get good return, that is useless. What I can say is that if I want a decent return in Petronet, this 5 month is very, very good for me. Why this 5 month is very, very good? What are the conditions now for good returns? I can visualize that if it has to go to an uptrend, it can make a big candle like this. Say I can expect a target up to 300. What is the percentage wise return? From 230 to 300, you can say almost 30% return. 25 to 30% return. It is decent enough. What would be the time frame? You can expect 5 months. No 10 years, 8 years, 7 years, no, nothing. Because what we can speculate is that 5 months is remaining for this yearly candle to close. And if it has to go up in an uptrend, this is the best time. In this 5 months, I can get a very good candle here. If I break it into more, say 6 months, you see these are all half yearly candles, 6 month candles, half of year. Here also you can see a good uptrend. So From here, if it has to go up, this point should not be broken, and from here also it shall go up like this. Another characteristics of all the stocks, all the index, this is very, very important, is that big candles are cooled down by small candles. What does this mean? Whenever there is a very big candle, you can expect few small candles to cool down, and then you can again see more big candles, and vice versa. When you see very, very small candles, then you can expect that, okay, now big candles can form because that cooling period is finished. It is applicable everywhere. Wherever you see in the chart, everywhere it is applicable. So if you see one big candle here, few cool down candles, and then again a big candle, again few cool down candles, again big candle, cool down candles, then a rally. After a rally, all these candles are small candles, cool down candles. You see the body of the candles, all are cool down candles. So what we can say, that there are so many small candles forming. Now it can give a big candle. So either a big candle upside or either a big candle downside. So these small candles are called consolidation phase. What we say as sideways or consolidation, that we say na, market is consolidating. Now it will give a breakout. This is the logic itself. So what?
Akash, one question, Akash. If you see, if you go a little bit backward to this one, we have only two short candles, small candles, and
Yeah.
now if you see, we have many small candles. How we can means like speculate that next is a small candle or a very big candle?
Very good question. Yes, thank you. So generally there are 2-3 ways to speculate about that. First is that the small candles, like, depends upon the cool down. Say your car has run 500 kilometer non-stop, you will give your car 2 hours to cool down. And suppose your car has gone only 50 kilometer, you will give your car only 2 to 5 minutes to cool down. If you apply this kind of a logic, if the rally is this much, these small candles, 2-3 candles are enough for another rally. And if you see such a big rally, then these candles are nothing in compared to this rally. So more the rally, more the time is required for cool down. But we cannot count the exact number of candles. For that we use moving averages. Which we will definitely learn in upcoming time. So why is this not opening? 50-day moving average. Suppose this is a 20-day moving average. How we interpret it, I will come to it. The stocks have a tendency that whenever it moves away from the line, after a good movement upside, it tries to touch the line back, and then again it decides what to do. Suppose you tell me any stock you want.
UPL.
So I go to UPL, and if I so this is also, all my analysis is done here. I'll just remove it as of now to avoid the chaos. Let me go to monthly, or maybe quarterly also. Quarterly means each and every candle is of 3 month here. So 2007 was its opening. So when you see there is an uptrend here, so what is happening is that each stock has its own characteristics, how it moves, its own beta value. What is beta value? The volatility. What is its volatility? So the moment there is a good gap from the moving average and the rally is very good, the stock has a tendency to cool down, to go back to its moving average, and then from there it tries to take support and then again move up. This was the COVID period. So what happens? We use multiple moving average, 20, 50, 100, someone uses 200. There is no restriction to what number you use. Any number you use, it is fine. These are all arbitrary numbers. We use numbers and we test that, okay, this stock is aligning itself with this number. This is how we come to understand. So if we see UPL here, this line is my 20-day moving average and this is my 50-day moving average. So all the moving average acts as a support. So when 20 gets broken, 50 gives it at support. Now again, when UPL went up, when it was here, it was quite a distance from its green line. So now it is waiting and again it is coming to its green line. So now from here, it will try to again take a support. And this is where we decide that whether it will break down like this or it will again go up. For that, we check the trends. So let me draw a line here. We are here on quarterly candle. Each candle is quarterly candle. What we expect that, okay, this 20 line gives support. So our question is, will this 20 line give support here or not? This is our question. Will it give its support here or not? Which means in quarterly, can we see a green candle here or not to complete this? Now we will break from 3 month. We will go to monthly. Now I will go to monthly. So this is how my monthly is looking. What do we see in monthly? We see that there was a good uptrend. There was a sideways movement. And now what is the price forming? If you see here, please. So now you see slow and steady, it is trying to form a downtrend. It is trying, still not. And this is our yellow line, which is our 20 moving average, where we expect it to take a support as of now. So in monthly, we are seeing it is downtrend, trying to make a downtrend. Still, there is no symptom which tells us to buy. As of now, we cannot see anything. Now I will go to weekly. Let me see what I can find in weekly. So in weekly, if you see, these were our moving averages. The price is already below the moving average. So in weekly, already this stock is very weak. And you can see by the price action itself, it has started to form a downtrend in weekly. Still no buying. I cannot see anything that, okay, which tells me to buy. If I go to daily, in daily also, there is nothing that can tell me to buy. When will the buying condition come? When I can see that, okay, suppose this is my yellow line, which was our quarterly line. Remember, quarterly line of 20 moving average, which says that I will give you support. This yellow line says I will give you support. So how can we expect in daily? We can expect something like this. Say there is a hammer candle, a green hammer candle, and then we can see something like this. This is just arbitrary. I am trying to make a price action. What we can expect? How we can expect? So in daily, if we see something like this from this point itself, we can say that, okay, after say 5 days, 6 days, or at least 10 days, something like this has started to form. So we can say this was our downtrend and now it is trying to shift. So the moment this is formed in daily, automatically in quarterly, what we started from analyzing, it will start to make a green candle here, because slowly and steadily price is shifting upside in daily. So in monthly, you will start to see a green candle being formed. And then we can say, okay, now we can see a buying condition, that, okay, now we can buy there. So these are very advanced thing, simple to understand, but we'll come to that. Today's session's purpose is only to understand the importance of multi-time frame. Why we need multi-time frame, why we need. Today's purpose is not to understand moving average or anything else. So suppose I go to some other stock, say, tell me any stock.
Easy trip.
Which one?
Easy my trip.
Easy my trip. Is there any stock like that? Okay. Ease my trip planner. hearing this talk for the first time. So it is very recently listed, say 2021. We do not have too much of a data on it. Still, we'll try to figure out if we see something. So in monthly, I cannot see anything as of now. In weekly, let me see. I need a bit more data to work on. Very less liquidity. What I can see is that that's it. There was a good uptrend, and now it has shifted to a downtrend. So suppose we want to buy easy trip. We want some conditions to buy. So I will close my moving average. We do not need this. So how do we see that, okay, now we can buy easy trip? Let me start with monthly, or maybe even quarterly also. Let me start here, quarterly. So this is what quarterly chart looks like. Let's tick our conditions for buying. So it started, went up, fine, came down, went up, came down, went up, and then this inverted hammer was formed. And after that, red candle started to form. So first and foremost condition is we need a swing to understand that, okay, the stock is no more in downtrend. It wants to go up. So this month is ended, 1 day is left. I don't know what will happen. It might, tomorrow it might go red also, it might go green also. We have to wait for few more months because we cannot see anything as of now. So say the next month, it forms something like this, a green candle. So now I can see that, okay, it was something like this. And now from here, it is trying to make a swing. And now if it has to go up, this should not be broken. From here itself, it should go up. So for easy my trip, as of now, it's a wait and watch game. Give it time. Give it 1 more month to wait. 1 more quarter. I am sorry. I am looking into quarter. So give it 1 more quarter. For monthly, if you want to see on a monthly basis, if you want, it is forming something like this, still in a downtrend. What we can expect, say for the next month, now we are in monthly. For the next month, there is a red green candle. Then we can see a bit more movement. So now when we try to see if it starts to form like this, we can say, okay, these points should not be broken. Then we can plan a buy somewhere and keep stop losses here. That's how we plan. But as of now, for ease my trip, I cannot see anything. So GAIL India Limited, like a few days back also, I told about this. See, all the levels are also drawn here. So in weekly candle, GAIL India, it was a picture for perfect trade for all the technical people. So it went up, consolidated, and then say if this candle was not there, I'll just use my replay button, I'll just cut it. So these two candles were not there, something like this was there. So I know very well, after moving, there is a sideways phase, and then a good green candle is formed. Very nice green candle is formed, very good demand is there. Let me zoom it if you want to see it more clearly, like this. So after this, if we want an uptrend, this area should not be broken. From here itself, it should go up. Now it can happen that there can be 10 candles, and then it can happen like that. And it can also happen that this candle itself will go up. That we do not know. That is not in our control. What is in our control is that we have seen the same structure over and over again for thousands of times. And every time we see that, okay, out of 10, 8 times it works. So we know very well that this is our stop loss, 104. And this is our buying point. So from here, if it has to go up, it will go like this. How many candles after? That we can only speculate depending upon a few other characteristics like moving average and other, that we will discuss. So the moment this candle was formed, it is very, very clear that, okay, from here, if it has to move up, even this will also be not broken. Forget about this. You should not even keep your stop loss here. enter here and keep your stop loss here itself, because the structure is as such. From here itself it will go. If this becomes red, no problem, just give your stop loss and exit, because you know out of 10, 8 times this happens in your favor only. You can say that if it forms a red, the 2 times where you should be wrong, that 2 times is here. That's it. See, that happened here also. This red candle was initially a green candle. Let me see if I can cut it and find it. Let me cut it. So if someone wants to plan a buying here, say, so what we say, went up, came down, and from here itself it should go up. So it should form a green candle here itself, like this. It should not break this point. So your stop loss is here. Let me keep my stop loss. Say this is my stop loss, and we expect a green candle upside. So what happened? In the beginning, you see, it is going in your favor. It is going in your favor in the beginning. Now you know very well that this is a very good demand. This demand itself should not get broken. So this was my initial stop loss. I will simply trail my stop loss to here. From here I will shift it to here, because I know this is a very nice green candle. If price has to go up, from here itself it will go up. No more going into red. So I will shift my stop loss from this point to this point, and I will still be in the trade. I will not exit, I will still be in the trade. If stop loss is hit, I will exit. My stop loss is hit, I will exit. So what happened? You exited here itself. This amount, this money was saved. So we will come into this slowly and steadily. We will backtest also. So after this multi-time frame session, we will for the next session also, maybe we can enter into demand and supply theory, the structures. We'll try to understand the structures, how it is formed. There is one more stock, say RVNL. So in quarterly, if we see, recently only it gave a very big breakout. RVNL. No, it was not RVNL. It was, I guess, IRCON International. Yeah, something like this, IRCON. So if you see in IRCON, monthly here. And now if I make these things, so people can say that, okay, the chart is already formed. You already know it has went up. So you are showing it in the chart. But trust me, when you backtest it, you will understand that what I'm trying to make sense. So if you see here, IRCON, it was in a total sideways movement. From the day it was listed, it was totally in a sideways movement. Gave a breakout. There is a red candle here. What do we say? How is the trend formed? Trend is formed something like this. So we know very well that if it has to go up, this should not be broken at the moment, because this is our swing. And there is one very good green candle. You can even say that this green candle should not be broken. You can even enter here and keep your stop loss here. But let's stick to the rules what we made. We will use this swing as our stop loss. So as of now, say if I want to enter here and I keep my stop loss here, what do I expect? I expect that, okay, fine, maybe 3-4 more candles and then it will go like this. Or I can expect immediately there is a green candle and it will go like this. It can form any pattern. So after entering here, what I see, let me go forward. So this is a monthly candle. That's why it is taking time to form. See this here. So even if when this monthly candle is formed, you are very, very sure about your conditions that now when this candle is formed, I don't even need this stop loss. I don't even need this stop loss. My stop loss will be this one itself, this point. because the structure says that I should go from here itself. I should not make a red candle. If I make a red candle like this, which means the structure is again changed to downtrend. So even if we entered here, our stop loss is very, very small here based on our assumption. And then from here, whatever it is, the price, whatever it goes up, it goes up. So the process, the analysis is every time the same and very, very simple. This one, that's it. And we know that out of 10 times, our accuracy can be, say, the worst can be 60 to 70%. Our accuracy. So no worries. If I am 3 times wrong, I am okay. For the 3 times, I will give my stop loss, because I know for the other 6 to 7 times, I am going to make double or triple profit. This is how the probability of game is played in investing also, in stock market also. So even if you try to understand this on a bigger time frame, say you do not want to trade, you don't have time, you are a job doer, you want to invest for week, month, quarter, year, same logic applies. You need only 15 to 20 minutes of your day after learning everything, and you know very well that what are the stocks that I have to keep in my stock watch list, and what are the prices I need to put alerts that this is the area where I need to buy, and from here I can expect in XYZ month this much return I can get based on my XYZ conditions. This is how we plan. So for TCS, suppose TCS is a Nifty 50 company, people invest every time. Whenever there is a price dip, people buy. That okay, there is a price dip of 10% in TCS, let's buy. So in TCS also, see, this was the picture perfect time where there could have been a very, very good investment in quarterly also. Say if I cut it here, say TCS is here as of now. We know it went up, came down, and now there is a green candle. So what is our pattern? How will this pattern get completed? Like this. So first condition is very well, this should not be broken. Still you need more confirmation. Let's wait for another candle. This much is enough for a confirmation. For any long-term investor, say 2 years or 3 years, say 1 year also, this is an enough confirmation for a price chart that from here, this is enough to go. You enter here, keep your stop loss here, keep your target 1:2. That's it. So the chart is already there. So people can say that, okay, you are telling. You can also forward test. If you want me to forward test that, okay, recommend me stocks now, that what can happen, that also we can see. Suppose we see Zomato. These are just random stocks, whatever it is coming in my mind. So in Zomato, there was one trade I already took, I guess. No, that was what. So Zomato, you see, in weekly, it is already in an uptrend. In weekly, it is already in uptrend. Fine. But if you go in monthly, still you cannot see any trend. Can you see any trend monthly? No. This is not a trend. This is a rally. Remember, I told you difference between rally and trend. Trend goes like this, and rally is a straightforward movement. So for Zomato, weekly there is trend. But if someone invests in Zomato seeing only weekly, that would be wrong. When you see in monthly, what do you want? You want, say, few months of a red candle like this in Zomato. Red candles, we should not break this. And then when you see something like this, a green in monthly, that would be a very, very good time to invest in Zomato. Likewise, we plan. So we will slowly, steadily, we will increase our conceptual difficulty levels. And it is not that if we have discussed anything today, we will never discuss it. Anytime if you guys have any query, you can anytime ask. And from now on, I would recommend you and request you that, guys, whatever is discussed here, please at least try to take 15 minutes of your valuable time, open any chart, and just try to see whatever I said today, is it making sense or not? Because Seeing chart is different thing, and when you have your mouse in your hand and chart in front of you, analyzing yourself is a different thing. So that you need to start. So that would be it for today. Any questions or any doubts? Okay, Titan you want to see. Okay, in 2 minutes I'll just see Titan and wind up. Titan Company Limited. The most of the charts you will see that I have already analyzed it. So Titan is already in a very good uptrend. Titan is already in a very good uptrend here. If I go to monthly or weekly, so see, this is my concern in monthly. Monthly is my concern. Why it is my concern? Because after an uptrend, there is a pause, uptrend and a pause, uptrend and a pause. So this uptrend, this is already gone. This is already gone. Now what we want at least a picture, something like this. This should not be broken. I know that this is my stop loss. This should not be broken. I can enter here also currently, but this is not advisable. Why? Because it will waste your time. This much time will be wasted. I want at least month, 1, 2 or 3 months, something like this. Then I can say, okay, now it is again forming like this and now it can go up. What you see here. So say suppose someone invested here in this candle and he put his stop loss here. Ultimately he got profit, but how much time he wasted? He wasted 1 month, 2 months, 3 months, almost 3 to 4 months he stayed invested there. But instead of that, if he would have invested in this month, structure would look something like this. Something would look it would look like this. And then you can say that, okay, this phase is over. If this is a green candle, if it has to go up from here itself, it will go. He will enter here. His stop loss will be also small and his waiting time period will be also very small. Because if uptrend is there, it will go up. If structure has to break, it will make a red and it will go down like this. So for now, Titan, please wait for say 2 months, 3 months at least. Let it make some proper structure and then we can see. So everything depends upon practice. The more you practice, the more queries and confusions you get, the better you do analysis and you can invest much more better. Axis Bank. This is, I will take 1 more minute of you guys. Axis Bank results. What was the result of Axis Bank? Profit soars 40% year on year, 40% increase in profit. Very, very good results, outstanding results. What happened to Axis Bank? This was the day of the result. From 990, it fell to 950, 40 rupees down, almost 5% down. So people, after seeing the result, they would have bought here, and now they will say that, okay, Axis Bank is very good, we will hold it for 2 years, 3 years, eventually it will give me profit. That is fine, eventually it will give you profit. Axis Bank is a good company, but we need to understand that what should be the good time to invest, how we should plan our trades to invest. So what should have been the course of action here? This is a very good demand zone. We'll come to this topic very soon. So just wait for the price to touch this part. I'll tell you, forward testing, no, there is no chart here. I will tell you, write down in the papers and then let me know what happened next week. Mark this area 930 and 910. Let the price come to 930 and then you see the magic. Today is 30th, na? I'm telling you. Let the price come to 930 and then you see the magic. What happens from there? In the next session, we will discuss. Okay, any more doubts or questions regarding today's discussion or any queries?
Ravindra has raised his hand. Ravindra, any doubt?
Yes, Karthik. Uh,
Yes, please.
yeah, Akash, actually, the session is really very good, and thank you for giving a beautiful insight for us. And my question is, uh, see, you told that these are the time frames that we have to follow, right? I understood that all those things, but the thing is, which one we should make it as a prioritize? Like, let's say, before entering into a trade, uh, either we should follow first monthly or weekly or daily basis.
So
Yes, I'm just having that questions. Yeah.
yeah, okay. So see, firstly, you have to decide that what kind of a trader or an investor you want to become. So first question is, so if you want to become a part-time trader or a part-time investor, a secondary source of income. So say you are doing a job and you cannot constantly monitor every day. You cannot see what is happening, and you want to invest for 5 months, 6 months, or 1 year. Generally, for one investing, say for one stock, if you want to invest, you want that it should be over by 5 to 6 months. Either I will get my target in 5 to 6 months, or I will exit by giving my stop loss. So for that, always start from yearly candle, yearly, half yearly, quarterly, and monthly and weekly. That's it. Suppose someone wants to trade daily, then he should start from monthly, weekly, daily, something like that. So you can say higher the time frame of your analysis, top down is the approach, the better your understanding will be. So initially, even if you are trading daily also, you should start from yearly. Even today also I do the same. If I want to see what is happening to a stock, I start from yearly only. So for example, Tata Motor, I want to see, I will just look into yearly, what is happening into yearly. So yearly will give me a straight away picture that fine, Tata Motor is in an uptrend. So I know very well, okay, I have to find buying opportunities. Yearly is very good. In half yearly also I see, okay, half yearly is also looking good, nice. In quarterly also I'm seeing that, okay, fine. In monthly also I'm seeing that, okay, yeah. In monthly, you see, in monthly, why I said there is one problem, because in half yearly, you see, it just started to make. In quarterly also, same. This is there, the structure is there. But the moment I go to monthly, I see there is a rally. So I know very well that in quarterly or half yearly, it is looking good to go up. But in monthly, I see a rally. I do not see something like this. So it might happen that if I invest today, I might have to wait for say a few more months. In quarterly, it is looking good, but due to this rally, it might happen that it can make a pause and then it can continue. So it is always recommended start from the highest time frame, from yearly to go down till daily. And for investing, you do not need to go to hourly charts. Hourly is not required. From yearly to weekly or maybe daily is enough.
Thank you, Akash.
And with practice, slowly steady, with practice, you will yourself understand that, okay, what is better for me, what kind of a trader I am, or what kind of an investor I am. That will come with practice only. Practice is required. The more you practice, the better your understanding will become.
Okay. Thank you, Akash.
Yeah, welcome.